Based on the historical data and forecast, Bitcoin has shown significant volatility, with a recent downtrend followed by some recovery. The RSI consistently indicates oversold conditions, fluctuating between 21.7 and 40.5, strongly suggesting potential for a rebound. The Bollinger Bands show that the price is currently near the lower band, further supporting a potential upward movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $86,800, coinciding with the first day of the forecast period. A stop-loss order will be placed at $84,700, aligning with the established support level to mitigate potential losses. The initial target price will be $89,800, based on the forecast price and the middle Bollinger Band. To maximize potential gains and manage risk, we will implement a dynamic target strategy. If the price reaches the initial target of $89,800, we will move the stop-loss to the entry price of $86,800, effectively locking in profits. Subsequently, we will adjust the target price to $95,900, which is the middle of the Bollinger Bands from November 27, 2025. This approach leverages the anticipated rebound while incorporating a trailing stop-loss to protect profits and capture additional upside potential. This strategy combines RSI oversold signals, Bollinger Band positioning, and support level consideration for a high probability, high reward investment opportunity. Based on the historical data and forecast, Ethereum has shown a downtrend from November 14, 2025, to November 27, 2025, with a recent bounce. The RSI consistently remained below 40, indicating a prevailing bearish sentiment. The forecast for the next week suggests continued volatility, with prices fluctuating around $2,820 to $2,930. Combining these factors, I propose a contrarian strategy targeting a potential rebound. Specifically, I recommend entering a long position at $2,820, placing a stop-loss at $2,770, just below the established support level. The initial target price should be $2,910, aligning with the upper end of the forecast range and a modest profit. To refine this strategy, I will integrate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, reinforcing the buy signal. If the price reaches $2,820 and the lower Bollinger Band is near $2,600, it strengthens the case for a long position. If the price moves above $2,910, I suggest moving the stop-loss to the break-even point to protect profits. Furthermore, if the price approaches the upper Bollinger Band, around $3,700, consider taking partial profits at $2,960 and exiting the remaining position. This combined RSI and Bollinger Bands approach aims to capitalize on short-term rebounds while managing risk effectively. Based on the historical data and forecast, XRP has been exhibiting a volatile trend with periods of consolidation. The RSI consistently fluctuates around the mid-range, suggesting neither strong bullish nor bearish momentum. The Bollinger Bands show XRP trading within a range, with recent price action approaching the lower band. Considering the forecast for the next week, with prices starting at 2.11 and gradually increasing, I recommend a moderately bullish strategy. We will implement a combined strategy using RSI and Bollinger Bands, prioritizing entries when XRP touches the lower Bollinger Band and the RSI is below 35. For example, on December 4, 2025 Thursday, the forecast price is $2.19, the center of the Bollinger Bands is $2.21, and the bottom of the Bollinger Bands is $1.91. When XRP reaches $1.92, we enter a long position with an entry price of $1.92. The stop-loss will be set just below the lower Bollinger Band at $1.89, and the initial target price will be the center of the Bollinger Bands at $2.21. To refine this strategy, we will incorporate a second target price based on the resistance level of $2.23. If the price reaches $2.21, we will move the stop-loss to the entry price of $1.92 and maintain the target price at $2.23. This approach aims to maximize profits while minimizing potential losses. The strategy will be adjusted daily based on the updated forecast and technical indicator values. The portfolio will be 60% long XRP and 40% in cash to manage risk effectively. This balanced approach allows for flexibility and responsiveness to changing market conditions, potentially yielding high returns while mitigating downside risk. Based on the historical data and forecast, BNB shows a downtrend with recent oversold conditions. The RSI consistently remains below 30, indicating strong selling pressure and oversold territory. The Bollinger Bands are also widening, suggesting increased volatility and a potential for a rebound. Considering the support price of $833 and the forecast predicting prices around $849 to $884, I recommend a contrarian strategy focusing on a potential bounce. Our entry price will be $849, placing a stop-loss order at $833 to limit potential losses. The initial target price will be $864, aiming to capture a quick profit from the anticipated rebound. To refine the strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches $864 and the RSI rises above 50, we will consider raising the target price to $884, capitalizing on further upward momentum. Conversely, if the price fails to reach $864 and the RSI remains below 30, we will exit the position at $849 to avoid prolonged exposure to a declining market. This blended approach combines the predictive power of the forecast with the risk management of technical indicators, optimizing for high returns while mitigating potential losses. Based on the historical data and forecast, Solana exhibits a volatile trend with periods of consolidation. The RSI consistently remains below 30, indicating a strong oversold condition, suggesting a potential for a bullish reversal. The price has been fluctuating between support at $127 and resistance at $142. The forecast for the next week projects a gradual increase, starting at $131 and reaching $135. Considering these factors, I propose a long entry at $131, placing a stop-loss order at $127 to limit potential losses. The initial target price is set at $136, aiming to capture a short-term upward movement. To refine the strategy, I will incorporate the Bollinger Bands. The current price is near the bottom band, reinforcing the oversold signal. If the price bounces off the bottom band and shows signs of upward momentum, it could be a good entry point. The strategy will be a combination of RSI and Bollinger Bands. We will enter long positions when RSI is below 20 and the price touches the bottom of the Bollinger Bands. The stop-loss will be set at the support price of $127. The first target price will be $136, and the second target price will be $142, the resistance price. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON has been in a downtrend, testing the support level of $0.274 consistently. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands show that the price is nearing the lower band, suggesting potential for a short-term bounce. Considering the forecast prices, there's a slight upward movement expected, but the overall trend remains cautious. Therefore, I recommend a contrarian strategy focusing on short-term gains. My proposed strategy involves a long position entry at $0.277 on November 28, 2025 Friday, coinciding with the forecast price and the lower Bollinger Band. The stop-loss should be set at $0.274, just below the support level, to mitigate potential losses if the downtrend continues. The target price is set at $0.284, aligning with the resistance level and a reasonable profit target given the current market conditions. This strategy leverages the potential short-term bounce indicated by the lower Bollinger Band and the slight upward forecast, while mitigating risk with a well-defined stop-loss. The expected profit is $0.007. Based on the historical data and forecast, Dogecoin exhibits a downtrend, consistently testing the 0.14 support level and fluctuating within a narrowing Bollinger Band range. The RSI consistently hovers below 50, indicating a prevailing bearish sentiment. Considering the forecast prices, which continue to decline towards 0.144, 0.145, 0.147, 0.148, 0.147, 0.146, and 0.145, a short selling strategy is recommended. We will initiate a short position at $0.153, placing a stop-loss order at $0.155 to protect against a potential upward reversal. The initial target price will be $0.14, coinciding with the established support level. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it suggests a potential bounce. However, given the overall downtrend and forecast, we will maintain the short position. If the price reaches $0.14, we will secure profits. If the price rebounds and reaches the middle Bollinger Band, we will adjust the target price to $0.145. This combined approach, leveraging both trend analysis and technical indicators, aims to maximize returns while mitigating risk. Based on the historical data and forecast, Cardano is currently in a downtrend, showing consistent lower highs and lower lows. The RSI consistently hovers below 30, indicating oversold conditions. The Bollinger Bands show that the price is nearing the lower band, further confirming the downward pressure. The support price of $0.405 has acted as a strong floor, and the forecast suggests prices will remain near this level in the short term. Considering these factors, I recommend a long position strategy to capitalize on potential rebounds from the oversold level and the support price. The entry price for this strategy will be $0.405, coinciding with the support level and the forecast price for November 28, 2025. A stop loss will be set at $0.399, just below the lower Bollinger Band to protect against further downside. The initial target price will be $0.436, aiming for a retracement towards the recent high. If the price reaches the target, we will move the stop loss to break even to secure profits and potentially extend the trade with a new target of $0.466. This strategy combines RSI oversold signals, Bollinger Band support, and support price levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a downtrend, with prices fluctuating around the 3,000 support level and struggling to break through the 3,270 resistance. The RSI consistently remains below 30, indicating an oversold condition, suggesting potential for a rebound. However, the forecast prices show a slight upward movement, but still within a range that doesn't decisively break the downtrend. Considering the Bollinger Bands, the price is currently near the lower band, reinforcing the oversold signal. Therefore, I propose a contrarian strategy focusing on short-term rebounds. We will initiate a long position at $3,060 with a stop loss at $2,960, below the recent low. The initial target price will be $3,160, aligning with the first forecast price, aiming for a quick profit. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches $3,160 and the RSI surpasses 50, we will move the stop loss to the entry price of $3,060 to secure profits. If the price fails to reach $3,160 and the RSI drops below 20, indicating a stronger oversold condition, we will consider exiting the position or tightening the stop loss to $3,000. The second target price will be $3,180, and if the price reaches this level, we will consider taking partial profits and moving the stop loss to break even. This approach combines the contrarian view with adaptive risk management, maximizing potential returns while minimizing losses. Based on the historical data and forecast, Bitcoin Cash demonstrates a fluctuating trend with periods of consolidation and upward movement. The RSI consistently stays within the range of 41.6 to 59.0, indicating neither strong overbought nor oversold conditions for most of the period. However, the forecast suggests a slight downward pressure in the short term. Considering the support price of $517 and the recent upward movement, I propose a long position strategy. We will enter a long position at $530, placing a stop-loss order at $517, just below the support level. The initial target price will be $556, the recent resistance level. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, we will tighten our stop loss to $520. If the price touches the upper band, we will adjust the target price to $560. This dynamic adjustment allows us to adapt to changing market conditions and maximize potential returns. This blended strategy, combining RSI and Bollinger Bands, offers a balance between risk and reward, aiming for high returns while protecting against significant losses. The portfolio will be 60% long position and 40% in cash. Based on the historical data and forecast, Shiba Inu is showing a slight upward trend with support around $0.00000780 and resistance around $0.00000880. The RSI is currently fluctuating but generally trending upwards, indicating increasing buying pressure. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential buying opportunity. Therefore, I recommend a long position. The entry price should be $0.00000830. The stop loss should be set just below the support level at $0.00000770 to protect against a potential downside reversal. The initial target price should be the resistance level at $0.00000880, aiming for a quick profit. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI crosses above 30 and the price touches the bottom of the Bollinger Bands, it's a strong buy signal. We can adjust the target price based on the forecast data. Given the forecast suggests a price increase towards $906, we can set a second target price at $0.00000890. If the RSI reaches 80 or the price touches the top of the Bollinger Bands, it's a signal to take profits and exit the position. This combined strategy provides a robust framework for maximizing returns while managing risk. Based on the historical data and forecast, Ethena shows a recent downtrend with significant volatility. The RSI consistently hovers around the oversold territory, fluctuating between 27 and 44, indicating potential for a rebound. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible bounce. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $0.249, coinciding with the first day of the forecast period. A stop-loss order will be placed at $0.233, aligning with the established support level. The initial target price will be $0.268, representing a reasonable profit target based on the forecast and recent resistance levels. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 30 and the price touches the middle band of the Bollinger Bands, we will adjust the target price to $0.281. Conversely, if the RSI falls below 20 or the price breaks below the lower Bollinger Band, we will immediately close the position to minimize losses. This dynamic approach allows us to adapt to changing market conditions while capitalizing on the anticipated rebound, aiming for high returns while managing risk effectively. Based on the historical data and forecast, just shows a generally upward trend with recent price fluctuations. The RSI values have been hovering around 60 to 70, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Given the forecast prices consistently above the recent close, and the support price holding steady at $0.038, a bullish strategy is warranted. We will implement a strategy based on RSI and Bollinger Bands, with a focus on anticipating the upward movement indicated by the forecast. Our strategy will be a combination of RSI and Bollinger Bands breakout. We will enter a long position when the price breaks above the upper Bollinger Band and the RSI crosses above 70, signaling an overbought condition with positive momentum. The entry price will be $0.0397. The stop loss will be set just below the lower Bollinger Band at $0.0354 to protect against a sudden reversal. The target price will be $0.0406, aligning with the highest forecast price. This strategy aims to capitalize on the anticipated upward trend while managing risk with clearly defined stop-loss and target levels. Based on the historical data and forecast, Injective has shown a downtrend with significant volatility. The price has been fluctuating between a support level of $5.34 and a resistance of $6.73. The RSI consistently hovers around the mid-range, indicating a neutral to slightly bearish momentum. The Bollinger Bands show periods of contraction and expansion, suggesting increasing uncertainty. Considering the forecast prices, which are expected to remain around $5.52 to $5.87, a cautious approach is warranted. We will implement a strategy combining RSI and Bollinger Bands, prioritizing risk management. Our strategy involves a combination of RSI and Bollinger Bands. First, we will look for opportunities when the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $5.34, coinciding with the support level. We will place a stop-loss order at $5.15, slightly below the lower Bollinger Band to protect against further downside risk. The initial target price will be $6.18, aligning with the previous resistance level. If the price reaches $6.18, we will move the stop-loss to break even. If the RSI crosses above 60, indicating an overbought condition, we will take partial profits and adjust the strategy accordingly. This approach balances potential gains with robust risk management, aiming for high returns while minimizing potential losses. Based on the historical data and forecast, Optimism has been exhibiting a downtrend, consistently testing the support price of $0.3. The RSI consistently remains below 50, with several days dipping below the oversold level of 20, indicating potential buying opportunities. The Bollinger Bands show that the price has been approaching the lower band, suggesting a possible bounce. The forecast data for the next week indicates a slight upward trend, hovering around $0.31 to $0.32. Therefore, I recommend a long position with an entry price of $0.303. Set a stop-loss order at $0.296 to mitigate potential losses if the downtrend continues. Aim for a target price of $0.334, aligning with the recent resistance levels and the potential for a bounce from the lower Bollinger Band. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, oversold, initiate a long position. When the price touches the lower Bollinger Band, it further confirms the potential for a rebound. Given the current RSI of 29.8 and the price near the lower Bollinger Band, this aligns with our entry point. The stop-loss should be placed slightly below the recent low of $0.296, at $0.296, providing a buffer. The target price should be set at $0.334, considering the recent resistance and the potential for a short-term upward movement. This combined strategy leverages both technical indicators for a more informed and potentially higher return investment. Based on the historical data and forecast, Celestia demonstrates a clear downtrend with consistently low RSI readings, indicating oversold conditions. The forecast for the next week suggests a continuation of this downward momentum, with prices hovering around $0.6. Considering this, I recommend a short position strategy. Entry price should be $0.612, aligning with the support level and the initial forecast price. A stop-loss should be set at $0.646, just above the recent high, to limit potential losses if the price unexpectedly reverses. The target price is $0.595, based on the forecast, aiming to capitalize on the anticipated decline. To further refine this strategy, we can incorporate the Bollinger Bands. The price consistently trading near the lower band reinforces the downtrend. If the price touches the lower band of $0.595, it would be a strong confirmation of our short position. We can adjust the target price to $0.595, maximizing potential returns. This combined strategy offers a high probability opportunity to profit from the current bearish trend, with clear entry, stop-loss, and target levels to manage risk effectively. The RSI and Bollinger Bands provide additional confirmation and support for this short position. Based on the historical data and forecast, Virtual's protocol has shown significant volatility with periods of both upward and downward momentum. The price has recently been trending downwards, but the forecast indicates a potential rebound. Considering the RSI values, which have mostly remained below 80 and occasionally dipped below 30, the asset is not currently overbought or oversold. However, the recent dip to 0.878 suggests a potential oversold condition. Therefore, I recommend a long position strategy with an entry price of $0.991. To mitigate risk, a stop loss should be set at $0.88, just below the recent low and below the support price of $0.736. The initial target price should be $1.05, aligning with the forecast and a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently touched the lower band, indicating potential support. If the price breaks above the upper band of $1.5, we can consider taking partial profits and adjusting the target price to $1.05. If the price falls below the lower band, it confirms a downward trend, and we should exit the position at the stop-loss level of $0.88. This combined strategy offers a balance between capitalizing on potential upside while limiting downside risk, aiming for high returns in a volatile market. The final portfolio will be a long position with an entry price of $0.991, a stop-loss price of $0.88, and a target price of $1.05. Based on the historical data and forecast, Ether.fi has shown significant volatility with a recent downward trend. The RSI consistently fluctuates, but it has been below 50, indicating a weakening momentum. The Bollinger Bands show that the price has recently touched the lower band, suggesting a potential oversold condition. The forecast data for the next week projects a slight increase, but within a narrow range around $0.73 to $0.78. Considering these factors, I recommend a cautious long position strategy. The entry price will be $0.73, with a stop-loss set at $0.677, near the established support level. The initial target price will be $0.777, aligning with the upper end of the forecasted range and the lower Bollinger Band. To maximize potential returns and manage risk, I suggest a tiered target approach. If the price reaches $0.777, we will take partial profits and move the stop-loss to break even. Subsequently, if the price continues to rise, we will set the next target price at $0.8. This strategy combines RSI signals, Bollinger Bands analysis, and forecast data to capitalize on potential short-term gains while protecting against downside risk. This approach balances the opportunity for profit with a defined risk management framework, suitable for the current market conditions. Based on the historical data and forecast, SKY exhibits a downtrend with significant volatility. The support price is consistently at $0.0418, while the resistance fluctuates around $0.0506. The RSI values have been oscillating between oversold and overbought levels, indicating indecision in the market. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. Considering these factors, I propose a portfolio strategy combining trend following and mean reversion techniques. My strategy involves a long position when the RSI falls below 35, indicating an oversold condition, and a short position when the RSI exceeds 48, signaling an overbought scenario. For the long position, I would enter at $0.0432, set a stop-loss at $0.0418, and target a price of $0.0491. For the short position, I would enter at $0.0491, set a stop-loss at $0.0506, and target a price of $0.0435. The forecast data suggests a slight upward movement in the short term, but the overall trend remains bearish. Therefore, I would allocate 60% of the portfolio to the long position and 40% to the short position, adjusting based on real-time market conditions and further analysis. Based on the historical data and forecast, basic attention shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the RSI has been trending upwards, indicating increasing bullish momentum. The forecast for the next week also suggests continued price appreciation. Given the current RSI of 71.3, which is in the overbought territory, a short-term pullback is possible. However, the overall trend remains bullish, supported by the Bollinger Bands, which are expanding, suggesting increased volatility and potential for further gains. Therefore, I recommend a long position strategy with a focus on capitalizing on the upward trend while managing risk. I propose entering a long position at $0.212. Given the current overbought RSI, I'll set a stop loss at $0.239, just below the support level, to protect against a potential pullback. The initial target price will be $0.259, aligning with the forecast price and a reasonable profit target based on recent price action. If the price reaches $0.259, we can reevaluate the situation and consider raising the stop loss to protect profits. Furthermore, if the price continues to rise beyond $0.259, a secondary target price of $0.267, the resistance level, can be set. This strategy combines the upward trend, RSI signals, and Bollinger Bands expansion to maximize potential returns while minimizing risk.